Hi guys, welcome to Starter Wealth, where we give practical and actionable advice to starting your wealth and creating and maintaining your business. During the COVID-19 crisis, all businesses should take advantage of every resource out there. There's no easy way to anticipate the ever-changing rules due to the nature of this virus. So, last week we went over the PPP loan in depth. Of the two different loans offered by the federal government via the Small Business Administration, the PPP loan is 100% forgivable. Unfortunately, the EIDL loan is not. Today, we'll be discussing the ins and outs of the EIDL loan. We've already gone through the PPP loan, and if you missed that one, I'll link to it down below. And of course, if you want to stay up to date on all the details, make sure you hit that subscribe button. If you find this video helpful, please like it, as it really helps out the channel and lets us know the kind of content you want to see. For even more research, deeper analysis, and links to tools, check out our website at starterwealth.com. Now onto the meat and potatoes. The EIDL loan is available during most disaster declarations. This particular one of COVID-19 has a deadline of December 31st, 2020. Okay, let's start with the basics. What is the EIDL loan? EIDL stands for Economic Injury Disaster Loan. It's a mouthful. The purpose of this loan is to enable businesses to be able to keep their doors open, basically. It's to minimize layoffs and disruptions to their business operations. There are two parts to this loan. The first is the best part. Similar to the PPP loan, the EIDL advance or grant is fully forgivable and is based on the number of employees you have. You will get $1,000 per employee on your payroll, up to $10,000 total. There is one big caveat to getting the EIDL loan and the PPP loan simultaneously, though, and we'll go over that later in this video. Now, onto the not so awesome part of the loan. The bulk of it is unforgivable. Broadly speaking, the amount of your loan is based on the economic injury the SBA estimates you've suffered. It feels very nebulous and non-specific, but according to the terms, you could receive up to $2 million per loan. However, it's widely reported that regardless of the factors they're supposed to take into account, unofficially the SBA has been capping loans to $150,000 only. There are limits to what you can spend your loan on, but generally anything considered working capital is permissible. Now for the brass tacks, loan terms. EIDL loans have a generously low rate of 3.75% fixed. This is about 0.5 to 1% higher than current mortgage and refinance rates, but it is about 1 to 3% lower than current HELOC rates. Even better is that payback terms allow for maturity up to 30 years. That means you can get up to 30 years to pay back the loan, which means lower monthly payments overall. And payments are automatically deferred for 12 months. However, interest will continue to accrue over the deferment period. So, just because you don't have to pay it doesn't mean it's not costing you something. But we are in survival mode right now, so if you can't pay it, at least you won't default. And if you can pay it, you might want to think about doing so just to lessen the cost of the loan over time. Like the PPP loan, in general, personal guarantees and collateral can be ignored for the majority of the independent contractors and mom and pop shops, in that the loan amount will most likely not exceed any collateral or guarantee thresholds. As long as your loan is less than $200,000, no personal guarantee is required. And since we know they're pretty much capping EIDL loans to $150,000, it seems safe to say a personal guarantee will not be needed in most cases. Additionally, if your loan is for less than $25,000, then no business or real collateral is required. If your loan does exceed that amount, the SBA would have claim to any business receivables and business assets you own. Learning how to set up your company properly to best mitigate your risk and protect your different business streams is a topic we plan on covering in the future. If you want to learn about that, comment down below and we'll put it together. Lastly, like the PPP, there are no fees to initiate the loan. Ordinarily, with a business line of credit, or really any loan, fees can extend well into the thousands. So this is a really great thing for disaster-struck small businesses who need every penny they can get. You might be wondering exactly who gets to apply for the EIDL loan. Like the PPP loan, any small business and independent contractor can apply. And once again, to emphasize, not having collateral will not preclude you from being approved for the EIDL, unlike other non-emergency SBA loans, which almost always require collateral. However, credit history might slow or even prohibit your loan approval. So, what can you pay with your EIDL loan? Essentially, you can pay for anything that is considered working capital. The SBA isn't super specific on what is considered working capital, though they are quite specific on what isn't considered an eligible expense. But more on that one later. If you didn't know already, working capital is generally agreed to be fixed debts, payroll, accounts payable, and notes payable. Besides that, the SBA also allows for some bills that could have been paid had the disaster not occurred. Let's dig into all of this further. Fixed debts are the payments you make at fixed intervals for a fixed cost. These would be your office rent or mortgage. Some utilities count as fixed debts if they are for the same cost every month. Property taxes or camera if you're in a shared maintenance building. Your business car lease. Business license fees, like the $800 LLC or corporate fee that California charges small businesses. Insurance premiums, and equipment leases. Payroll is pretty self-explanatory, but specifically it includes all your employees, including yourself, as long as the pay is for normal salary and wages for the usual work that has to be done to keep the business operational. The EIDL loan can be used to cover the entirety of your payroll expenses, including payroll taxes and employee benefits. The thing to keep in mind is that the key to the EIDL loan is that it is not meant to enrich owners or employees or expand businesses. So, as long as your salary levels and employee benefits remain in line with previous years, you should be fine. Accounts payable is another pretty easy one. These would be your regular vendor or supplier bills to keep your businesses running. For example, the cost to pay FedEx to ship out your packages or the cost for materials to make your widgets. Notes payable is a bit more complicated. In general, notes payable means a loan, but the SBA specifies that it can only be a short-term loan. Short-term debt means less than a year to maturity. So credit cards count as long as the debt is business related and the inability to pay or the expenses incurred are due to the disaster. Revolving lines of credit also count, but a regular line of credit probably does not if it has a maturity date greater than a year. The SBA also allows for an additional expense that can be paid from EIDL loans, and that is for bills specifically due to the disaster. That can include things like temporary rent or storage fees. For example, let's say you can't make office rent, and before you got the EIDL loan, you had to shut down your physical space and move all your items into storage. These storage costs could be paid by the EIDL loan. But hopefully, since you're watching this video, you apply ASAP and get it funded so that this doesn't happen to you. Other extraordinary items would be additional advertising costs. Like if I'm a restaurant in California and the regulations keep changing, like now you can have indoor dining, now you can't, now you can have outdoor dining, now you can't, I might need to get that info to my customers out quickly, which would equate to more advertising costs. Another extraordinary item is accelerated debt due to the disaster. This kind of falls in the same bucket as just being able to pay off business credit card debt. But the SBA is saying particularly when it's due to the disaster, it's even more okay to pay your credit cards with the EIDL loan. This is because if not for the disaster, you might have been able to pay your bills with cash, or at least pay down your credit card. But due to the disaster, you've lost revenue and now can't pay off the balance in full, so interest keeps accruing and accelerating your credit card debt. An extraordinary item that you might not think is extraordinary is inventory. The example that I see used the most is what if you're in a seasonal business like fashion and you had the funds for last season's inventory, but you don't have it for this season's inventory because the disaster obliterated retail. In this case, the cost of your new inventory would be considered allowable as an extraordinary item. I think the SBA makes a distinction in inventory being an extraordinary item versus just lumping it in with accounts payables, which is already allowed, because some companies may be trying to expand their business, which again, that's not the purpose of this loan. By buying inventory that's not a part of their usual business, it makes it so that it's for expansionary as opposed to the regular usual course of business. So the SBA allows for inventory, but not as an expansion of your business. And our final example of extraordinary items or costs due to the disaster would be the cost to train new employees. If your employees are unable to come back to work because they're sick or they have to care for a loved one who has COVID, the cost to rehire and retrain for the position would be allowed. Now that we know what we can spend our EIDL money on, the question is, what does the SBA consider ineligible expenses? The first is that payment of any dividends or bonuses is not allowed. And the second one is closely related to the first in that disbursements to owners, partners, officers, directors, or shareholders are not allowed, except for regular salary for the usual job they do. So, regular salaries and wages to employees and owners are allowed, but bonuses to employees or owners are not allowed. Basically, their salary should be commensurate with the job they do and what they've been paid in the past for doing that job. Always remember that the EIDL is not meant to enrich businesses or shareholders. It's meant to help them weather through the disaster. Next on the list of ineligible expenses for the EIDL is repayment of stockholder or principal owner loans to the company. The exception to this is that repayment of loans to owners is allowed when the funds were injected short-term as a result of the disaster and non-repayment would result in undue hardship to the lender. Yeah, it's a mouthful. Let's take a look at some examples. In example number 1, the company suffers a cash flow shortage due to the lack of business from the pandemic. So the company owner lends $100,000 to the company to cover the shortfall for payroll till the EIDL and PPP loans are received. Unfortunately, because of this, the company owner cannot make his own mortgage next month unless he's paid back immediately. In this scenario, the repayment would be allowed. In example number 2, let's say the company received a loan from the owner 3 years ago before the disaster ever happened and has never paid it back. Also, the company owner cannot make his mortgage next month unless he is paid back immediately. In this case, the repayment would most likely not be allowed because the loan would be both a long-term debt and not directly related to the disaster. For our final example, let's say the company received a loan from the owner of $100,000 again to cover shortfalls in payroll due to the loss of revenue from the pandemic. However, the company owner is flush with savings and has no expected hardship yet. Most likely, the repayment would not be allowed as there is no undue hardship pending. So are we clear on when an owner loan can be paid back with EIDL money? If you're not, feel free to ask a question in the comments. Okay, let's move on to the next ineligible expense. You cannot expand your facilities or acquire new fixed assets with EIDL funds. Here's another accounting term for you: fixed assets. A fixed asset, in the most basic terms, is a real thing, tangible things that can't easily turn into cash like property and equipment. So as we've already learned, you can buy inventory, but you can't buy property or major equipment, period. Items that fall below the fixed asset threshold for your company can be considered supplies rather than a fixed asset, and that would be allowed. A lot of my business management clients set their asset levels between $1,000 and $2,500 as the minimum per item to be classified as an asset. These are set by your accounting and finance departments if you have one, and most likely your CPA if you don't have one. You should ask them how they classify your purchases as a fixed asset. Number 5 on our list of ineligible expenses is the repair or replacement of physical damages. These should be starting to get pretty easy to suss out as to why they are considered ineligible expenses, as long as you remember that the purpose of the EIDL is to minimize layoffs and business disruptions. It's not meant as a fix for your property affected by the disaster. Additionally, there are other SBA loans that are specifically for property loss and damage due to a disaster, like the Business Physical Disaster Loan and the Home Disaster Loan. Number 6, 7, and 8 are all kind of along the same lines. You cannot refinance long-term debt. You also can't pay down any loans provided or owned by another federal agency, including the SBA, although the FDIC is excluded from this. You also can't pay any part of a direct federal debt except to the IRS. As a reminder, long-term debt is any debt with a payback date of greater than 1 year. The federal agencies you can't pay are basically everyone except the FDIC and the IRS. The IRS is a key exception. If you've already received your EIDL loan, or you haven't, but you're penalty-proof and filed an extension on your tax returns until September, October, then when you get your money, you can pay your 2019 tax obligations as well as your 2020 taxes with the EIDL funds. That would then free up unrestricted cash that you already presumably have in your bank account. Okay, number 9 on this list is any penalty resulting from breaking the law. Examples of this would be parking tickets, court fines or fees, and court judgments. Even if the parking ticket were incurred in the normal course of business, like if you sent an assistant to pick up lunch and he parked in the wrong spot or didn't feed the meter, it's not allowed as a deductible business expense for tax purposes, and it's not allowed to be paid by the EIDL, as the government doesn't want to reward you for breaking the law, and they're certainly not going to pay you for it. The last two on our list of ineligible expenses are likely not going to apply to you, and that is contractor malfeasance and relocation costs. This is if a contractor really messed up with your property or the cost it takes to move out of your home, like in the case of other disasters, hurricanes, tornadoes, etc. Again, the reason these aren't covered by the EIDL is that there are other loans that specifically handle those items, like the BPDL and the HDL. Now for the million-dollar question. What happens if you misuse the EIDL funds? Well, you would have to pay a penalty of 1.5 times the amount you borrowed, and your loan can come due immediately. For an honest mistake or something borderline that you generally thought was allowed, depending on the amount, I would expect the SBA to be somewhat lenient in how they apply this penalty. But to be 100% certain you're not subject to it, I would just say to use the funds as explicitly intended and free up your unrestricted cash for those more questionable business expenses. As we discussed in the last video, you can get both the PPP and EIDL advance, which is the forgivable part of the EIDL loan. But what happens if you do? Well, the amount of your PPP loan that is forgivable decreases by the amount of your EIDL advance. So, at least your EIDL advance amount will have to be paid back at the PPP interest rate of 1%. Essentially, even though they say the EIDL advance is free money, it's not if you also get the PPP loan. But the good thing is that it's the EIDL advance that then becomes forgivable, so that you're paying 1% interest, or the PPP rate rather, which is the lower of the two rates. Let's look at a simple example. If you receive a PPP loan of $100,000 and the full $100,000 was forgivable because you satisfied all the PPP requirements, and again, if you don't know what those are, review our PPP video linked below. But let's say the full PPP loan was forgivable, meaning you don't have to pay it back. But then you also end up receiving the $2,000 in EIDL advance. Now only $98,000 of your PPP loan is forgivable. You have to pay back the $2,000 in advance that you received at 1% interest. This brings us to the next conflict. You cannot use the EIDL for the same expenses as the PPP loan. So for the 8 to 24 week period that you choose to use the PPP loan for your payroll, you cannot also use the EIDL loan for the same period. You can, however, use it for subsequent periods, but not during the PPP one. Now for the hardest question to answer. How is your EIDL loan amount determined? Well, that's a really good question in that not many people can say with any certainty. I can give you the general outline of how they're supposed to calculate it, but at the end of the day, it almost seems like they're just throwing out a number. So according to the SBA, they determine the estimated loss you've suffered, and that's based on the disaster declared and your business type and history. Some experts say how it's supposed to work is that it should be a multiple of 4 to 6 times the monthly average gross profits. But no one honestly knows, as the SBA seems to just do what they deem is necessary or desired. If you think you need more than what they've determined, you can work with the SBA to up that amount. If you find you need more after you've already accepted the loan amount, you have up to 2 years to request an increase. This, by the way, is spelled out in the Standard Operating Procedure PDF issued by the SBA for the Disaster Assistance Program. If you'd like to comb through that master doc, I've linked it below. There's a lot more detail, but there's also 228 pages worth of info. Okay, back to how your loan amount is determined. Once they've decided how much you're approved for, you can choose a lesser amount than the max that they've determined. You can also choose to decline the loan. If you're not approved for the loan, you can try again by submitting a request for reconsideration with new information within 6 months. And as a reminder, the lack of real collateral does not preclude you from attaining the loan, but your credit history might affect the amount that you receive. Now for some key things to note. You can decline the loan and still receive the EIDL advance. If you're not sure you need the funds yet, you do have 2 months from the time you're approved to accept the loan. Also, while I'm sure the majority of you don't fall into this category, nonprofits who receive more than $750,000 in federal funds, of which this loan counts as federal funds, will be automatically subject to single audit. For-profit businesses don't generally have to worry about this. Now I'm going to walk you through how to apply for the EIDL loan. These loans are issued directly by the SBA. So, you'll go to the SBA website, covid19relief.sba.gov. On the very first screen, you're going to choose what applies to you in the top part. However, at the bottom half, you'll note where I've highlighted that you must be able to check all of the following below it in order to be eligible for the EIDL loan. So make sure you are able to check all of those boxes and that you do. Moving on to step number 2, you'll fill out all of the required business information on the next screen. You will need to know your gross revenue and cost of goods sold. Move on to the next part, which is your own info, all of the basics, including your social security number. Almost done now. Unfortunately, the EIDL advance portion is out of money as of yesterday, July 13th. So there is no more checkbox to certify stating I would like to be considered for an advance of up to $10,000 so that you can receive the forgivable portion of the EIDL loan. But as we've learned, it's not really forgivable if you get the PPP loan in addition to the EIDL advance. So hurry and apply for the PPP one before it runs out of funds too. In the meantime, you can still get the EIDL loan, but no portion of it will be forgivable if you haven't already applied for the advance. In the final step, you'll need to be able to reply no to all 3 questions in order to be eligible for the EIDL loan. Below that is where you enter your bank info to send the EIDL funds. It's pretty fast as soon as you're approved and have accepted the loan. The funds are usually deposited within 2 days of signing all the loan docs. Once you've submitted your application, all there is to do is wait. You will receive an email confirmation asking you to create an account and confirming your application as soon as you submit it. It takes about 5 days to find out if you're approved. From there, you have 30 days to do the next steps. Once you get this approval email, you'll log into your account to confirm your loan amount, verify your identity, and fill out the electronic disbursement info. You see in this example that the recipient qualifies for $150,000, the unofficial EIDL max. This person already accepted the award amount, but previous to accepting, there is an option to lower the amount if so desired by clicking where it says Amount Confirmed. You will need to verify your identity by confirming personal information and then confirm where you want to send the funds again. The last box in orange is to sign the closing docs if you want to accept the loan. And again, you do get 2 months from the date of approval to accept the loan. But at least do the 3 prior steps within 30 days so that they don't rescind it while you decide. Well, I hope this clears up a lot of the confusion surrounding the EIDL loan. If you'd like to see more videos like this, please hit the like button and subscribe to our channel. And leave me a comment below to let me know what video topics you'd like me to deep dive into for the next one. Thanks!